So are interest rates going to come down, and has Rishi Sunak just saved the buy-to-let market? Now a lot has happened in the last week. We've had a new Prime Minister. He seems to have settled the markets, the pound's going up again. There is actually talk that interest rates are not going to go up as much as anticipated. I know that interest rates have to go up to fight inflation. Now we're told that inflation is high because of the cost of food and the cost of gas and oil. Now for me, I can't see how interest rates fully correlate with the price of food and gas and oil. Now if you're watching this video before the 3rd of November, then interest rates are currently at 2.25%. This is the base rate. However, on the 3rd of November, the Bank of England will get together and they are more than likely to put the interest rate up to 3%. However, mortgage lenders have already factored this into their rates that they're offering their customers. So if the rate does go up on the 3rd of November to say 3%, more than likely we're not going to see an increase in the rates that mortgage lenders are offering us. Now if you noticed, when the interest rates went up a couple of weeks ago, the gap between the base rate and what lenders were offering was a lot larger than it usually would be. So for example, when the base rate was 0.5%, then you could probably get a mortgage for 1.8% to 2.5%. Now the base rate's 2.25%, we're seeing lenders offering 5.5%, 6.5%, 8%, even 10% mortgages, which is ridiculous and it's way above the base rate, way above what they would usually offer in terms of the gap between the two. Now the reason they've done this is because, one, they're protecting themselves, and two, they know that the interest rate's going to go up again in the next couple of weeks or a few months. Therefore, they've already factored in this rise in rates. But now that Rishi Sunak is Prime Minister and the markets have settled, there is a fairly good chance that in the near future, these interest rates which the lenders are offering will actually come down a little. Now, I don't know if you've noticed, but for the first time I've ever seen it is when you look at a mortgage offer and they offer you a fixed deal, and then underneath it says it goes on to their follow-on rate, which is a variable rate. This follow-on rate is actually lower than the fixed rate that they're offering you. Now this in itself tells you that the lender is inflating the rates. Now having listened to a lot of economists lately, they believe that the rates are going to continue to rise, but then they're going to retract. Now for me, rates can't go up to 8, 9, 10, 12% because the economy would just simply crash. And the government definitely don't want the economy crashing before the general election, and they certainly don't want house prices crashing. Again, if this happens before the general election, then chances are they're not going to get elected. Not that they probably will anyway after everything that's gone on. But for me, everything's been hyped up by the media far too much. People think that because interest rates are on the way up, they're just going to keep going up, and it's simply not true. There will be a point where they level out and they will remain at this level for a period of time. Now, nobody knows what that figure is going to be, but it's more than likely to hover around the 3 to 5% mark. But if you're a property investor or a buy-to-let landlord, this is actually good news because as soon as interest rates level off and there's a bit more stability in the market, it's a lot easier to evaluate deals. It's a lot easier to go into property with confidence, knowing exactly where you are, knowing exactly what your figures are going to be. Now, one of my mortgages on my buy-to-let is coming up for renewal in January, which is only a couple of months away. So the 2-year fixed term ends. Now this mortgage is currently on 2.42% rate. Now obviously this is going to increase quite a lot. However, I do have quite a big safety net. Now I've calculated that my contingency is I can go up to 9% without actually making a loss on the property. Now I don't think that's going to happen. I'll probably have to settle for something like 5.5%, 6%. And again, I'll only have that on a 2 years fixed because I don't think they're going to go a lot higher than that. And I'm willing to take the risk in 2 years' time that I can get a better deal. But also in that time, I will do things to protect myself. I'll do things to make sure I've got surplus funds, try to increase the rent slightly, as I mentioned in my previous video. And also, having a portfolio of properties means that you can use other properties as collateral for your properties that are making a loss or not making as much profit. So, for example, one of my properties, the fixed rate term doesn't end until 2027. Therefore, this is a good opportunity for this property to make more profit than the property that I'm going to have to remortgage in a couple of months' time. Therefore, it all balances itself out. and it offers some sense of security in terms of your whole income from your buy-to-let business, because you're not always going to have the good times with every single property. A few months ago, one of my properties, I had to replace a roof. It cost me about £3,500. However, I can easily offset this from the profits from all my other properties. So although it's a bit of a kick in the teeth, it didn't mean I made an overall loss. It just meant that my profits were slightly down for this year due to this reason. So what I'm trying to get at, if you can balance your books, if you can adjust your portfolio accordingly, even if one or two of your properties are not making much profit, then the other ones can make more profit than they usually would do. Now, another thing I want to mention is, I know that interest rates have to go up to fight inflation. Now, we're told that inflation is high because of the cost of food and the cost of gas and oil. Now, for me, I can't see how interest rates fully correlate with the price of food and gas and oil. So for me, putting up interest rates, which slows down the economy, it prevents businesses from expanding, it prevents people from starting businesses, it causes people's mortgages to go up considerably, which gives them less surplus funds. All of this isn't going to have an effect on the price of food, because the price of food is determined by the price of gas and oil, the energy prices, because it has to be made, processed, delivered. So putting up interest rates isn't going to decrease the price of fuel, the price of gas and oil. It isn't going to stop a war. It's not going to make your loaf of bread come down, because the manufacturing costs have to simply go by how much it costs for them to produce it, which isn't going to make a difference. Now, I totally understand that we need interest rates to go up to encourage people to save, but things with food, it's a necessity. You have to have food, you have to have energy. So the interest rates aren't going to bring that down, in my opinion anyway. I'm not an economist, I'm not an expert, so it's just my personal opinion. I totally understand that rising interest rates, it would bring the cost of goods down, but things like energy and food, what can you do about that when it's all down to energy prices? So based on this is probably the main reason why I don't think interest rates are going to go really high. Also, the higher they go, the more it costs the government to pay back their debts, which they won't want to happen. Now, if you've got an opinion on this, or you've got more knowledge than I have, please leave a comment below. Please give us your thoughts. I'm always interested to hear people's opinions on the economy and interest rates and buy-to-let. So please drop a comment below. Also, don't forget to follow me on Instagram. And I'll also be back very soon with an update on my property portfolio, as I'll be producing another vlog. So keep your eye out for that. And also, I'll be putting an update out on the 3rd or 4th of November after the next Bank of England announcement. I hope you enjoyed the quick video, and I'll catch you soon.